All right. Hey, Jay, welcome back.
Hey, thanks for having me again, Levi.
Yeah, of course. So today I'm kind of excited about our topic, really, because when I came to work with you, this was one of the first things I noticed that you talked about with clients and really emphasized. So I'm excited to hear you talk about this a little bit more. And what we're going to get into is just the cash, especially as this timely topic is we're pushing up on tax time this time of year, is the cash versus accrual basis. And I'll kind of just let you explain that a little bit to the listeners on what you're looking for in that and the reasons that you feel like that's so important, especially this time of year, as most people are getting into that.
Well, it's obviously it's a timely topic. Sitting here April the 6th or 7th or whatever day it is, as we're right in the thick of tax season, and for a lot of farm clients that I work with, their tax season is kind of come and gone for 2022. But the reason it's so important is that I think there's a common misconception out there that the primary, one of the primary advisors that most farmers or people involved in agriculture listen to is their tax advisor. And I think it's good in one sense because, let's be honest, like nobody wants to pay any more taxes than they absolutely have to. But I guess that's the good thing. On the flip side, though, I think there's some times where, people forget that the true purpose of a business is to generate positive earnings and wealth versus not to have to pay Uncle Sam anything in tax dollars. And so I guess just kind of getting back to your core question of what is the difference between cash and accrual, it's very basic. It's a very basic concept. Cash basis accounting is exactly what it is, what it sounds like, which is tracking the dollars, the actual cash dollars coming into a business as revenue, and the actual cash dollars leaving a business as an expense. So cash or tax accounting is nothing, it's nothing more than that. It's just an accounting of cash in and cash out. And so the objective of every good cash basis statement or tax return essentially is a cash basis statement. The objective is to have as little to no taxable income as possible, right? And so that is very different when we're talking about, the true purpose of a business is to generate positive earnings and wealth. You can't get that information just by looking at cash accounting, because specifically in agriculture, where we're a very fixed asset driven sector, so we own a lot of fixed assets, plus we tend to carry inventory at certain times of the year. We tend to prepay expenses at certain times of the year. So if you're trying to evaluate the profitability of your farm or ag business based on cash accounting, like that is the complete wrong thing to be doing. A tax return is nothing more than a compliance document, whereas an actual accrual financial statement, that does tell you the true performance of your business. So,
And I feel like I agree with you. And I feel like for a lot of these guys, it's kind of their first step into the finance field. When they go into their tax office and they get a lot of their numbers in. And some of them, that's the only time that they do that. So a lot of these farmers or whoever are just unbelievable operators, especially business owners. And so this is the first time where they're seeing the true business side of it, where they're having to understand finances and when to take in some of those different costs. Like I think what you're trying to get to is that if you're just doing that through a tax accountant, he's going to get your taxable income as low as possible because that's what his job is. And if
correct.
you're thinking that that's the job of your business as well, I think what you're kind of saying, you're missing the ball there.
Exactly. I mean, again, when it comes back to it, nobody wants to pay any more tax dollars into the system than they have to. So that's the role of the tax accountant. But to truly understand the financial performance of your business, you need something more than a tax return, and so, I've asked either clients or potential clients in the past, like, how did your business perform in, a certain year, whether it's 2022 or 2021 or 2020. And I just cringe when I get the response that, well, the tax man doesn't have the statements put together yet. They're completely missing like the intent of my question, right? That a tax return is not going to tell you whether you made money or not. A tax return is going to tell you whether you collected, how much cash you collected and how much cash you spent. And so therefore, what is your resulting taxable income? It's not going to tell you anything more or less than that. So.
And I think one of the things that a lot of people don't take into consideration, because a lot of it just gets processed as it comes in, especially in this time of the year when you're trying to get through those financials, is that when you do want to have that growth and build upon it, it helps to know month over month, like last December to this December. Well, that's not always the case when you're, on that cash basis too. When did you actually take it? When did it come out? When you're trying to compare month to month and when all of that's happening, if you're not recognizing it at the same time that it's happening every year, it's hard to compare year to year. I think that's one of the biggest bases, or that's at least my understanding. Is that how you would see it? Or?
Well, I would. So here, if somebody's going to ask me for what financial information do you need to tell if a client or a potential client has been profitable or not, the last thing I'm going to ask for is a set of tax returns, because I really don't give a shit about what the tax return says. I really don't.
Yeah.
If they don't have accrual financials, so obviously the highest level would be accrual financials, right? So show me your accrual income statement, so that would be that right there will tell you if the business made money or not. But short of having that, I would much prefer to have a common dated balance sheet for an operation that captures all the inventory, all the accounts payable, all the accounts receivable, and fixed assets at historical cost, less estimated depreciation. I would rather have multiple years of those types of balance sheets put together so that I can do what they call an earned net worth reconciliation, right? So that right there would tell me a hell of a lot more about the performance of the business over a period of time than having any tax information, any tax return information. In fact, I think I understand why lenders ask for tax returns up to a certain point. And, I don't want to be controversial or anything, but I guess that's just kind of my nature. I've even gone so far as to saying, I think after you reach a certain size and complexity, bankers shouldn't ask for tax returns anymore, because all that does is, I think it creates confusion, and I think it creates this false illusion that you can actually glean something meaningful from a tax return. In my opinion, you can't.
Mm-hmm. And so
that's a little bit controversial.
Oh yeah, for sure. Well, I think a lot of people, and especially in the ag, but just business owners everywhere, and like you talked about, especially at the smaller levels, you just don't know what you don't know too. And I think a lot of people are just taught that growing up, or it's the only thing that they really know or how. So just kind of understanding that and then being able to take that next step, I think the financials and the data that those provide is what really helps people. But if you never learn that accrual or the difference, I think that can really limit a lot of people from doing that.
So just let me clarify something right here. So I'm not advocating that you shouldn't get your taxes done anymore. Right?
Yeah.
I'm not saying don't go to your tax accountant, don't get tax returns done anymore. Because statutorily, you're required to file taxes every year, right? So you have to do that. What I'm saying is you prepare a tax return to meet a compliance requirement. You should prepare other type of financial information to meet your own requirement to enable you to determine, is my business performing? Am I making money? Am I losing money? What are my true expenses in the certain, in the different categories of expenses? So you can't get any of that information from a tax return. I guess that's my point, is tax return compliance, accrual financial statement, performance.
I thought Brock had an incredible quote when him and I were going over some CapEx strategy and kind of talking a little bit in these lines as we were up on tax day. And he was saying, when taking on big CapEx projects, that taxes are a factor, not the factor. And I think that's kind of the same gist that you're saying. Like, taxes are very important. We're not, disagreeing or not saying that, but it's a factor. There's a lot of other factors and things that go into making business decisions as well. And
yeah, if you truly want to understand the performance of your business at the next level, you're not going to get that and think it's going to be grounded in tax return information, because it's just not.
And so as we're kind of right into it, and this is a great time for people to start looking at as they filed, how does that transition look? I know you've done that with quite a few clients. What do you see as some of the kind of pain points in making that switch over into the accrual basis? Or what is something that day one that someone should be doing to making that switch a little bit easier?
So number one, actually install and use an accounting software. I don't care if it's QuickBooks. I don't care if it's Centerpoint. I mean, there's a handful of what I would say are legitimate accounting software packages out there. So I think first step is run your business on an accounting software platform, not just through your checkbook, right?
Mm-hmm.
So that would be number one. Number two is the pain points are typically take the time to recognize accounts payable in the period in which the expense is incurred, not when you actually write the check to pay for it, right? So this whole idea of what is an account payable, when did I incur that expense versus when did I pay for it? Similarly, on the revenue side, if you make a sale, right? So let's say that you're in the business of raising corn, right? So you raised corn, you put it in a bin, and now you've sold it. So recognize that revenue when the sale is made, not when the sale is collected, right? So it just kind of comes back to a very basic concept of when was the revenue or the expense generated, incurred, versus when did the actual cash piece of each of those transactions happen? When did I collect the cash versus when did I pay the cash? So the AR and the AP, that is typically kind of where the hang up is initially. And then the other piece would be inventory. So in cash basis tax accounting, you don't recognize inventory, right? All you do is track cash in versus cash out, where from an accrual standpoint, the difference between cash and accrual can really be boiled down to a handful of things: AR, AP, inventory, and then depreciation would be the last, meaning tax basis depreciation versus book basis depreciation. So the length at which you depreciate a fixed asset purchase is different when you're talking cash or tax versus book or accrual.
Yeah, I think
it's really those four areas where the majority of the hang up occurs if you want to transition from cash to accrual. It's AR, AP, inventory, and then the method of depreciation of fixed assets.
And how happy is your lender going to be when you come in with accrual statements?
Well, they're going to be ecstatic because you just made their life easy, right?
Yeah.
So typically what a lot of ag lenders do is they spend a lot of time and energy doing cash to accrual adjustments, right? So you come in with a fair market value balance sheet and a set of tax returns, and what they're going to do is they're going to make adjustments to the revenue and expense information to account for the differences, the cash to accrual differences in inventory, AR, AP, and fixed assets. So if you come in with that information already compiled, you just basically did their work for them, right? They don't have to make any of those cash to accrual adjustments. They can look at an income statement and a P&L on an accrual basis and really understand the performance of the business over that period of time. They don't have to make any of the adjusting entries.
And I think that just speaks volume to the importance of it too. Like if this is what the bank is doing to justify, where your business is at, obviously they've learned a few things over banking for that long to understand that, hey, these are the important numbers that we know that where the risk is at. And if you have these numbers, these are the where to concentrate and notice where that risk is coming from. And I think that it could help business owners a ton too, knowing those same things.
Well, yeah, I mean, who knows more about your business than you do? I mean, the guy or the gal that's actually running it, or the banker that gets a set of tax returns and a balance sheet once a year, right? So the more you understand the concept of cash to accrual, the better I think you're going to understand the drivers of your business, and the better you're going to be able to tell your own story, right? Rather than relying on the banker to tell your story to whoever's making the ultimate credit decision. So
where would you suggest their first steps be to do that? I know you talked about kind of how it goes. Would you hire somebody on? Oh, go ahead.
Well, two things. I mean, and you've heard me say this 1,000 times, Levi. Most farmers don't get into the business of farming, or get into farming because they like the business of farming. They like the activity of farming, right? But if you want to make that switch to being a farm business owner, guess what? Financial statements are the language of business. So, I don't care if you want to do it or not, but if you want to be a legitimate business owner, you need to know the language of business, and that is financial statements. That's accounting, right? So I don't think farmers can bury their head in the sand on this anymore. And if they don't want to do it, then find somebody and pay somebody to do it for you. Just because you can't do it yourself doesn't mean that it doesn't need to be done.
Yeah, and I think one of the things that gets undervalued in this is how much more room it gives you to go out and operate. So I think a lot of farmers and just business owners in general are usually great operators because they're good at something. That's why they start the business. And I think when you're able to have those financials tell you the story, and you can take that to the bank and understand, where you can get more capital and when you can't, and have those understandings, it allows you to go out and be able to make those decisions because you know that you can, or that your business can.
Yeah, I mean, it just makes the process of making sound business decisions that much better if you've got higher quality information. I mean, it just comes down to to me, it's as simple as that.
As always, we appreciate you guys tuning in. If you have any questions on the cash to accrual basis, please reach out. I'll have the our link tree, which has our website, in the description, but also in the show notes. We've been doing a lot behind the scenes. I want to get a few more of these videos out and get it a little bit more consistent. But we've been working on some stuff with our clients and things that we hope to share with a lot of you guys, as far as like self-evaluation forms we've noticed have been really popular with our clients. Just kind of gives them a grading of where they're currently at and kind of shows them some of the pain points to address. And we've had some really great feedback. So if that's something that some of you guys may want in the future, we've been working on that behind the scenes and are excited to get some of that out to you guys.